Welcome to the StockMentor.com studios. I'm your stock mentor, Brian Johnson, and we saw another consolidation day today. Very clear, not so much on the daily charts, but on the 60-minute charts. Very clear, showing the consolidation that we've seen the last couple days. Very common to see this after a large move up, which is what we saw Monday morning. So on the daily charts, everything looks like there's been a lot of volatility. But on the 60-minute, you can see things have been very well contained. We had a little fight with the overhead resistance levels that we had drawn in here in the 50-period moving average. But by the end of the day, everything came back down. Markets finishing, what is it, like 0.3% down for the day. And the Nasdaq was up. It managed to squeak out a little bit of a profit today, but they're all sitting right around break even for the most part. You can see here on the daily, it looks like we had a huge day yesterday, followed by a lot of volatility up and down. But based on the 60-minute, really, we didn't go anywhere. Still holding this 10,730 area by the end of the day, and played around with, and ran away from the 50-day moving average. So now we've had, we'll arguably call it one or two touches of this 50-day moving average, and it has held very nicely. Still watching for breaks of that 10,950 area ultimately up and above here. So are we going to roll over? Are we going to consolidate another day? Anybody's guess at this point. After that big gap up on Monday, I expected consolidation maybe for a couple of days. We've seen it now. We'll see if it decides to make a move tomorrow. I honestly would not be surprised to see it do a little bit of what it did today, a little bit of up, a little bit of down, and then finish right around break even again for at least one more day. Certainly wouldn't surprise me in the least bit. If we start to break back below 10,700, that might be another opportunity to get short, at least from an intraday standpoint on the Dow. Nasdaq on a 60-minute, you can see it gapping down, running up to the 1960, only to pull right back down into this 1940-ish area. So yesterday we gapped up, hit 1940, ran away, hit 1940, ran away. Today we ran through 1940 only to come back and revisit it and hold it as now support. We'll see if that lends its hand to more bullish prices in the future. However, we still have to contend with the overhead 50-day moving average, which is what we tagged and ran away from today. So this was my overhead resistance level coming into today, and it held and worked very fine for most of the day, giving us a 20-point move up and a 20-point move back down to trade. Overall, though, last 2 days, you can see sideways, just consolidation in this area. Weekly standpoint, very curious to see it holding right below this overhead channel line, the blue line, and the overhead resistance level now. What was support is holding as resistance at this point. We'll see if it can actually hold before the end of the week. SPX on a 60-minute, same type of thing. Hitting 1160, breaking through it, coming back down, finishing back below 1160. Once again, same thing as we've seen on the other ones, fighting with the 50-day. 50-day was my overhead for today, and we hit it, ran all the way back down. Made for some decent trading intraday. I didn't do any trading again today, expecting a consolidation day, and ultimately that's what we got. Nice little doji here. Is that a reversal doji? Is it a continuation doji? We don't know. Gee. So we will have to wait and see what kind of a break we get tomorrow. Back below maybe 1145-ish. Could give you a good intraday short play, and maybe we can see 1130 by the time that move is over with. Once again, don't be surprised if we see somewhat of a consolidation day tomorrow as well. That was just a huge move on Monday, so we'll see where the markets decide to go and what they decide to do here. I would think by the end of the week we'll definitely see some movement, but large moves like that usually rattle the markets, and they just have to shake their head of the cobwebs and figure out exactly where they're going to go next. From a weekly standpoint, maybe we end up testing the lower side of this blue line now over the next couple weeks. That would be quite a push, but as the bulls have been very strong, especially after the big move to the upside on Monday, based on the grease, save grease type thing. Grease is still the word, if you haven't heard, by the way. We'll see if they finally get tired of it. This is what we tend to see, guys. Greece is in trouble. Crash. Greece is getting bailed out. Yay. Greece is in trouble. Crash. No, Greece is going to be bailed out. Yay. And once again, what do we see? Oh, Greece is really, really in trouble. Oh, big crash. Now we're going to bail Greece out. Ooh, big gain. But it doesn't last long. Eventually, that whole stigma kind of rolls off investors' back, and I'm sure eventually they start to figure out, yeah, okay, things aren't really all that fixed, and we don't know if that whole bailout thing is all that true. Will they really follow through on it? So my bias, at this point, is very neutral. I gotta say, we're really in betweener mode right here. I can build a bear case. I can build a bull case. I'm pretty equally strong on both of them. So I'm just waiting for the charts to tell me which way that direction is. And if I have to sit on my hands another day, then so be it. A lot of good trading is patience. A lot of good trading is patience. And is besides discipline, it's one of the hardest things to do when you want to trade the markets. VIX on a daily, back down again today. It did gap up, only to run all the way back down. From a weekly standpoint, it didn't move anywhere. It's right back where it started, putting in this big doji-looking thing right now on the weekly. Below 30, but hanging just below 30. So it's still kind of in the yellow zone for me, getting close to the yellow to red zone and holding there for the time being. Apple on a 60-minute made for some half-decent intraday trading as we got back up and above the 50-period moving average here, ran back up to this 257.50 area that I've been talking about, break above it, and eventually get back below it by the end of the day. So there was some decent trading in Apple, both up and down. You can see it finishing up for the day, but fighting with the what? The 20-day moving average. That was a good overhead resistance level for Apple. It did manage to close about 20 cents above it, but it's basically at 20 cents is nothing to Apple, so it's basically at the 20-day moving average. Will it hold? We'll find out. Weekly, putting Apple back up and still holding above the blue line. Breaks below and ultimately closes below this blue line start to put Apple in a little bit of dangerous territory from a bull standpoint. You want to be very cautious. Continue to watch that blue line. FAS on a 60-minute, down 33 cents. That's nothing for FAS, hardly a move at all. Once again, 50-day holding on it as well. Run up to it, run back. This makes for very tough trading. Any of these that went up and then rolled back, you got to know what you're doing intraday to really make a profit on them. Same thing with FAS. It pulled down and went back up. Notice how it bounced at or around this 200-period moving average. Didn't hold perfectly, but close enough. And you can see what it ultimately is holding. This lower support line, this lower blue channel line, and the 20-day moving average. Lots and lots and lots and lots of support down here. So breaks below 12 or 11.90, probably not a bad place to get short for an intraday short. But once again, FAS and FAS all choppy sideways. I wouldn't have a part of them right now. I'd just sit back, find something else to trade, wait for better trades. That's it for today, guys. There was nothing to talk about. Markets are chopping sideways. They're going nowhere. They're doing nothing. Hard to trade this type of stuff unless something is moving in a more major way, but it's not. Everything is sideways chop. This is a great time to get your hands slapped. It's a good time to plant May flowers after the spring showers and see if you can get something to grow in your yard. All right, so with that being said, we're expecting snow. I'm not planting any flowers because they'll probably all be dead by the weekend. Yeah, I know. Welcome to my world. You guys be careful with your money. Wait for this thing to make a more definite move below these major areas. Well, I wouldn't call them more major areas, but I'd call them more minor areas of support and resistance below and above us before we start making any kind of or putting any kind of capital into the market itself. Wait it out. Sit on your hands. Be patient. It's tough to do, but it's the best thing you can do for your money right now. All right. See you tomorrow. Bye.